Why the heck are our insurance rates skyrocketing in 2024? I recently read a fantastic article from Dave Ramsey and George Kamel at Ramsey Solutions, so I wanted to break down their tips and insights for you. Grab your favorite beverage, get comfy, and let's navigate these choppy insurance waters together. Hey everyone, T at Trailstone here, and we have been asked this question dozens of times every day. Why are our home and auto insurance rates skyrocketing? According to Dave Ramsey and George Kamel, it's not just because Flo put her headband on backwards or because Mayhem decided to go into overdrive. The truth is, the property and casualty insurance industry has been struggling for a while. Let's break it down. What are the market factors impacting insurance costs? Here's the deal. Home insurance rates have gone up about 23% in the last year, and car insurance up a whopping 39% since December of 2019. And it's not just us Americans. Even our friends across the pond in the UK are feeling the pinch with a 64% increase. So why is everyone's insurance going up? Well, several reasons. First is natural disasters. More natural disasters mean more claims. Just think about the recent hurricanes like Ian and Irma pummeling through the East Coast or wildfires out west. Second is market losses. The property and casualty industry have been running at a loss for years. And inflation. Rising costs for car parts, building supplies, and labor. Also, supply chain issues. Remember the global chip shortages affecting car production? Well, George Kamel used this analogy. It's like when the price of wheat skyrockets and your local bakery has to charge more for bread. Same goes for insurance. The cost to insure people has risen, and the industry is trying to balance out these losses. Okay, so let's talk specifically about why is my car insurance so high? Well, there are several personal and market factors at play. Some of the personal factors is age and gender. Drivers under 25 and over 75 pay higher rates. Gender also plays a role here. Second is location. If you live in a big city or high crime area, well, your premiums will reflect that. For instance, if you're in a bustling city like Denver or Phoenix, expect higher rates than someone living in a more rural area. Third is credit score. Credit score under 600 means higher premiums. Dave Ramsey recommends ditching debt altogether just to avoid this. As he famously says, debt is dumb and cash is king. So if you follow his advice and pay off your debts, you'll find that your credit score becomes irrelevant and you'll be in a much better financial position overall. We've seen clients with no credit score at all receive better rates than someone with a 750 credit score. And next is your driving record. So speeding tickets, DUIs, and any other violations will push your rates up. Take Sarah, for example. She's a 22-year-old college student who lives in downtown Portland and has a couple of speeding tickets. Her car insurance rates are significantly higher than her friend Emily, who's 30, lives in a small town in Utah, and has a clean driving record. Following Dave Ramsey's principles, Emily paid off her student loans quickly and avoided getting into credit card debt, which helped her maintain a great credit score and lower insurance rates. So let's discuss some market factors for auto insurance rates. First, more accidents. Since 2020, drivers came back more reckless, leading to more severe accidents. Dave Ramsey often discusses how societal changes can impact our finances, and this is a perfect example. With more severe accidents, insurance companies face higher payouts, and those costs get passed down to us, the consumers. Second is supply chain snafus. Fewer cars being produced have increased car values and thus insurance rates. Now onto home insurance. Why are we seeing such high rates here? Key factors for home insurance increases are natural disasters. More severe weather events have led to record insurance claims, and Dave Ramsey often talks about how unexpected events can disrupt our financial plans. Well, these natural disasters are prime examples and are affecting insurance companies across the globe, honestly. Next is supply chain issues again. So Labor shortages and material costs are driving up repair costs. Next, location. Living in disaster-prone areas means higher premiums. Here's another real-world example of Mike and Lisa. They recently moved to Colorado, and they've seen their home insurance rates spike due to increased risk of hail in their area compared to their previous home in Arizona. Following Dave's advice, they've built an emergency fund to cover unexpected expenses, but the rising insurance costs still hit hard. All right, enough doom and gloom. Let's talk about how we can fight back and lower those premiums. Here are some tips from Dave Ramsey and George Kamel that you can start using today. First, raise your deductible. If you've got an emergency fund, consider raising your deductible because this means you'll pay more out of pocket if something actually happens, but your monthly premiums will be lower. Dave Ramsey always stresses the importance of having an emergency fund to cover unexpected costs. By raising your deductible, you're essentially betting on yourself to handle minor incidents without needing to involve your insurance company. One of our customers, John, raised his car insurance deductible from $500 to $1,000, which saved him about $300 a year on his premiums. And thanks to his well-funded emergency account, he feels confident that he can cover the higher deductible if need be. Second, get rid of any coverages you don't need. So take a really good look at your policy. Do you really need all that coverage? For auto insurance, consider dropping extended coverage, gap, or personal injury protection if they're not required in your state. Dave Ramsey is a big advocate of only paying for what you truly need and not wasting money on unnecessary extras. Consider Mary, for instance. She decided to drop the rental car reimbursement and roadside assistance from her policy because she had an extra vehicle and purchased roadside through Good Sam Club. This saved her an extra $150 a year. She followed Dave's advice to budget for these expenses separately, so she's not overpaying on her insurance. And here's one of my personal pro tips. You do not want to file extra roadside assistance claims on your auto insurance policy because this may cause you to be non-renewed or renew at much higher rates. Claims with Good Sam Roadside don't affect your insurance premiums. Third, take advantage of discounts. Look for discounts. Many insurers offer discounts for good driving records, installing safety features in your home, or even having good grades if you have a teen driver. Dave Ramsey always encourages us to find ways to save money and maximize our budget. So discounts are a perfect example of this principle in action. Next, bundle your policies. Bundling your home and auto insurance with the same provider can save you a huge chunk of change. Some companies offer up to a 25% discount for bundling. Dave Ramsey talks a lot about efficiency and making your money work harder for you, and bundling policies is a great way to do just that. Here's another example. Tom and Rachel, they bundled their home and auto insurance policies and saved $840 a year. They were thrilled to see that the savings allowed them to put more money towards their debt following Dave's advice. Next up, compare quotes from different providers. When was the last time you shopped around for insurance? Comparing quotes from different providers can help you find a better deal. Don't be afraid to switch if you find a better rate. Dave Ramsey always emphasizes the importance of being proactive with your finances, and this is a great way to take control. Our customer Samantha hadn't shopped for car insurance since she bought her car 5 years ago. Trailstone Insurance Group, a Ramsey trusted pro, shopped Samantha's policies, and by comparing quotes, she found a new provider that saved her $1,300 annually for the same exact coverage. She used the extra savings to build her emergency fund, just like Dave Ramsey recommends. So why does Dave recommend Trailstone Insurance Group? Trailstone is a Ramsey trusted pro, and we shop more than 40 top-tier insurance companies to always find you the best price and coverage. Whether it's home or auto insurance, our team is dedicated to making sure you're getting the best deal possible. So why settle for sky-high premiums when we can help you save? After all, there's no cost to help. Dave Ramsey always stresses the importance of getting expert help when needed. So by working with Trailstone, you're tapping into a wealth of knowledge and expertise to ensure you're not overpaying for your insurance. Plus, our team is committed to providing personalized service to meet your unique needs. Want more proof? Google Trailstone Insurance Group and see we have more than 2,400 five-star reviews across the 7 states we serve our clients. There you have it, folks. Insurance rates might be climbing, but with these tips from Dave Ramsey and George Kamel and a little help from Trailstone Insurance Group, we can keep your budget in check and your peace of mind intact. Remember, it's all about being smart with your choices and not being afraid to make a switch if it saves you money. Dave Ramsey always says, live like no one else now so you can live like no one else later. By taking these steps to reduce your insurance costs, you're freeing up more money to pay down debt, save, and invest in your future. Thanks for tuning in, and if you have any questions or need help with your insurance, don't hesitate to reach out to us here at Trailstone Insurance Group. We're always here to help. Stay safe, stay savvy, and until next time, take care.